Hello, YouTube. Bringing bring a little market profile into here. So this is what they call market profile, and it's a bit different. It's essentially there's another layer to looking at a chart. It basically introduces time. So there's a lot going on here, but so say like this blue vertical line. So that would be your initial balance. And I'm using MetaTrader 4 and TPOchart 2, right? So if I come over here to my settings and I'll show you what I'm using. So I'm located in Edmonton, Alberta, Canada. So my time zone is Mountain Standard Time, right? But because my broker is in Turkey, right? So they start their day at 0, right? So anyways, it's just a broker thing. So there's you don't have to use these settings, though they are the same settings that traditionally are used. So when it says IB, that's initial bar, right? So that was your blue vertical line. So that I got 2, right? So and you come over here, row size and pips 2, and the data period 30 minutes, and profile type is daily, right? So all that means is that we come back to our chart, right? So every profile that represents a day's trading, right? And then each letter represents 30 minutes, right? But you see how there's like multiple A's? Okay, so that's like the A's started printing, say, here, right? And then it prints again, and why does it print 5 times? Well, remember it says row size in pips was 2, right? So if we go over here, okay, if we look to the right, I see 58, right? So I'm looking at one over to the right on my screen. Look at 1.24587, right? So I know the pip head is 7, and the pip location is 58, right? Because you got 1.2458, right? You get it? So 58, right? So we come down in the next one. Well, that's 56, right? There's 2 pips. Next one, 54, and then we got a 52, and then 50, right? So in the half hours trading, right, it printed these five letters, right? And then we go on to B, right? So then B, it kind of shoots up here for initial balance, right? So then after B is printed, right, so that would be your first hour of trading. Now you can change that, right? But I don't trade that way. So now we got the open, which is right here. So it opened here, right? And then the close of the days is the other arrow, right? And then we got a value area, which is about 70%. So that's where value is. And when price spends time in the area, you can assume that it had volume, right? So if you look here, you see this highlighted blue line, that would be your point of control, right? So it's basically the day prints, like this particular day, we're kind of in the range from the composite profile, like we look left, right? So we're basically in the range of yesterday. So there's because the initial balance opened in the previous day's value area, we know that there's not going to be a whole lot of opportunity, right? So basically, okay, I see an imbalance, but the longer time frames are not present, right? So like, okay, so the market opened kind of in the lower end of the previous day's value area, right? So why did the market not rise up? Well, look how hard it is for the market to overcome the initial balance, right? I don't know if you're quite understanding that. So basically it's like an auction, right? So the other time frame traders have to work so much harder to produce a move, right? So a lot of times it's best just they're not interested, right? So like if you're a scalper, like maybe you're trading this all day, right? But you're not seeing a breakout, right? Because there's no confidence inside this thing, right? Because like it opens here, it wicks down, and it comes back, right? And then it's choppy. Look how choppy it is because we're inside the previous day's value area, right? So you eventually come to the understanding that that's what it's all about, is value area, point of control, and where is the fair price moving to, right? So just looking at the previous day, okay, there's my value area, and look, my value area is contained within here. Right? So where's my opportunity? There really is none. Now, yes, it did move, like 80, 100 pips, but like we didn't see it move down or a move up, right? That's because the other time frame traders are just not interested, right? And you can see it, right? So here we go. Okay, that day looks a little funny, and like it is P-shaped, yes. So that's, what is that, right? So the market came up, no confidence to the upside, but look when it did that, right? So okay, that it does weaken the market, right? Because you see the next day we have even less opportunity, but look, we have a drop off in price. But why, right? So this day and this day were both P-shaped. So what does that mean? Okay, so the market rose up and then they covered it, right? So here we go. In this previous day, we get A, B, C, D, and then where did it go, right? It made it all the way down here, and then it closed here, right? So the close was on the low of the value area. So that's one sign that we could have potentially bearish opportunity, right? So you see how there was buying here, right? So the market's not ready to come down, but every time this happens, it weakens it, right? Like once you look at this so many times, you'll just get it after a while, right? So we had this day here, right? There's no interest in having a breakout, right? So we get the same thing here, and yes, it is confusing because look, buying tail 1, 2, 3. That's a good buying tail right there, right? Those little A's, right? And the same thing here, little N's. Only 3 of them, right? But then here, okay, market comes here, and look, the initial balance is really small. So guess how easy it is for the market to break out, right? Now, even though it is basically symmetrical, so there's essentially equal opportunities on both sides of the market, right? So if you are at the point of control, well, you could take the market up to here, or it could take the market down to here. But look, it's like trading an inside bar, right? At some point, it's going to break out.